Slumping retail sales flashes a warning sign for the housing market. What's the connection between retail sales and the housing market? It's actually quite revealing. On a year over year basis, your retail sales were released. This is the standard retail trade level at a level of 2.0. It's the lowest low we've seen in several months, following last month's report of 2.3%, again on a year over year basis. Now, retail sales all overall were weak. The headlines, for the most part, discussed apparel, gasoline sales. We're going to look a little bit in an unusual direction. We're going to talk about building materials. These are materials that are used to build homes, construction projects. You think of stores like Home Depot and Lowe's on a month over month basis, down 0.8%. On a year over year basis, we can see more of a dramatic fall, down 4.3%. It's one of the weakest segments of the retail sales number. Now, on a year over year basis, we can see retail sales, building materials, again, it's down 4.3%. It's the lowest low we've seen in 3 months and almost one of the lowest lows we've seen in about a year or so. Now, taking a look historically, we've seen 15 consecutive negative monthly reports. This is on a year over year basis. The current level is negative 4.3%. It's 15 consecutive negative months, 15 months of decline. What does that look like going back to the 2007, 2008 crisis? We did see 15 consecutive negative months start in September of '06. If you recall, September of '06, this was well before anybody was talking about a housing market issue at all. But we can see that's when the negative report started. It did not end there. It was about a year later that we really saw the beginning of the housing slump, the housing crash, we could say, in 2008. It doesn't mean that every retail sales slump will lead to a 2008 housing crisis, but 15 consecutive negative reports is not a good sign. Now, in blue, retail sales, building materials, that's what we're talking about today, present day. In red, Case-Shiller Home Price Index. Notice we should expect a positive correlation, a positive relationship. When retail sales in the building materials in 2022 started to decline, so did the Case-Shiller Home Price Index. But something very interesting happened. Case-Shiller Home Price Index, now we can say maybe it's attributed in part to the inflationary forces we've seen, but the retail sales building materials did not participate. Case-Shiller Home Price Index went back to the upside. Retail sales for building materials did not. Now, even more recently, we can see as the Case-Shiller Home Price Index continues to make higher highs, we're seeing lower lows on the building material sales. That certainly is troubling. Go back to 2006-7 in red, building material sales. In blue, Case-Shiller Home Price Index. Again, we would expect a positive correlation, and we saw it. And then in the recovery, 2008, 9, and 10, both lines turned back to the upside. It's not the prettiest chart. They didn't move up in unison, so to speak, but they both moved in the same direction. That's what we would expect now. That's what we're not seeing now, though. Now, this is interesting. We can see in blue, this is the retail sales building materials. In red, Case-Shiller Home Price Index. The gray represents the spread. It's a very imperfect economic study. But we can see here, if you take the red line, that's a Case-Shiller Home Price Index on a year over year basis, subtract from that the year over year retail sales, we come up with a level of 10.8%, meaning that on a year over year basis, the report for the Case-Shiller Home Price Index is around 10 or 11 points higher than retail sales. This is a disparity. It means Case-Shiller Home Price Index is going up without building material sales. When did this happen before? We can go back to 2001. We had a 12.3% spread. In this case, Case-Shiller Home Price Index, again in red, was far greater than the retail sales for building materials. More recently, 2007, we had a 9.8% spread. And we can see in this case, both lines, the red and blue lines, were trending lower. So on a year-over-year basis, Case-Shiller Home Price Index was declining, building material sales were declining, but the Case-Shiller Home Price Index, for whatever reason, maybe it's a slower moving market. It doesn't move as quickly as the change in retail sales. Maybe that's why it didn't catch up in time, but we do see a divergence. That's 9.8%. Well, again, present day, 10.8%. So we have 1 point greater of a disparity between the Case-Shiller Home Price Index and building material sales. And the trend is troubling. It looks like, at least for the most part, home prices continue to rise, building materials continue to slump. Speaking of which, we like to take a deep look at the data. We feel it's not enough just to look at the headline. Again, if you looked at the headline today in terms of building or retail sales, we should say it was all about apparel, gasoline sales, non-store retails, for example. We like to take a little bit of a different approach and dig a little bit deeper into the data, such as the manufacturing numbers we spoke about the other day. Here we can see quite a troubling trend where prices received is diverging quite a lot from prices paid. The manufacturers are falling into a serious bout as a result of the inflation. And I think that you'll find what we uncovered here to be quite interesting.